Let's dive into a game-changing moment in the world of building products. A moment that could reshape the entire construction landscape as we know it. Picture the backbone of every construction project: lumber, roofing, drywall, insulation, and so much more. These are the essential materials that keep America building, and they're at the heart of this story. QXO Inc., a rising star in the distribution world, just landed a staggering $1.2 billion investment. This isn't just a big number. It's a signal that the construction industry is about to experience a major shakeup, with QXO right at the center of it all. The impact was immediate. QXO's stock price skyrocketed by 18% as soon as the news broke, sending a clear message that Wall Street is betting big on QXO's vision and future plans. So, what exactly is QXO's vision? They're not just another distributor. QXO wants to become the ultimate one-stop shop for builders, contractors, and suppliers across the country. Their strategy? Aggressively acquiring other companies to expand their reach and streamline the way building materials are sourced and delivered. This massive investment acts as their war chest, a financial fuel tank designed to power rapid growth, bold acquisitions, and industry consolidation. With this kind of backing, QXO is poised to move faster and further than ever before. And it's not just any money. This funding comes from some of the sharpest minds and most influential investors in the business world, led by a major player whose identity we'll reveal in the next chapter. Over the next few minutes, we'll break down who's investing, what this deal really means for the industry, and why it matters to everyone. From the contractors on the job site, to families planning their dream homes, and even to curious homeowners watching the market. Get ready, this is a story about ambition, bold strategy, and the future of how America builds. Whether you're in the industry or just fascinated by big business moves, you won't want to miss what comes next. Let's get started. The main backer behind QXO's billion-dollar boost? Apollo Global Management, a giant in private equity. Apollo manages hundreds of billions, investing in companies they believe can become industry leaders. They're not just throwing money at QXO, they're betting on CEO Brad Jacobs, a proven winner they've partnered with before. Apollo sees the building products industry as fragmented, lots of small players ripe for consolidation. Their strategy helped QXO buy up competitors and build a super-efficient giant. This isn't just cash. Apollo brings expertise, board-level guidance, and credibility. Their investment is a powerful endorsement of QXO's vision and leadership. With Apollo's backing, QXO isn't just growing, they're aiming to dominate. It's a partnership built for aggressive expansion. Let's see how the deal is structured. So, how does this $1.2 billion investment actually work? It's not just a simple cash infusion or a straightforward loan. Instead, it's a carefully structured deal designed to give both sides, Apollo and QXO, unique advantages and protections. Let's break it down. Unlike a regular loan, where you pay back principal and interest, or common stock, where you just own a piece of the company, this investment is something in between. It's a hybrid, offering the security of debt with the upside of equity. Apollo is buying convertible perpetual preferred stock. Think of it as a VIP ticket to the company, one that comes with special perks and front-of-the-line privileges. This isn't your average stock. It's designed to give Apollo a priority seat at the table. Preferred stockholders get paid first if profits are distributed, making it a safer bet than common stock. If QXO pays dividends or if the company is ever sold, Apollo gets its share before regular shareholders see a dime. That's a big deal for investors looking to protect their downside. The convertible part is where things get interesting. Apollo has the option to swap these preferred shares for regular stock later, at a set price of $23.25 per share. If QXO's value takes off, Apollo can convert and ride the upside, turning a safe investment into a potentially huge win. And perpetual means there's no expiration date on these shares. Apollo can hold on to them as long as it wants, making this a true long-term play. There's no ticking clock forcing them to cash out, unless they want to. But there's a catch. QXO can't just sit on the money. They have to use this $1.2 billion to buy other companies, fueling their growth strategy. And there's a deadline. They must make their first acquisition by July 2026, or risk losing the deal's benefits. If QXO signs a deal before that deadline, they get extra time to actually close the acquisition. It's a built-in incentive to move fast, but also to be strategic and not rush into the wrong deal. The message from Apollo is clear: here's the cash, Now go build your empire, quickly but wisely. The pressure is on to deliver results and transform QXO into a powerhouse. This structure ensures QXO stays aggressive and laser-focused on growth, with every move watched closely by investors and competitors alike. The clock is ticking, the industry is watching, and the stakes couldn't be higher. Every decision QXO makes from here on out will be under the microscope. So, who's steering this ambitious ship? Let's meet the man leading the charge. Meet Brad Jacobs, QXO's CEO, and the mastermind behind this bold strategy. Jacobs is a serial entrepreneur with a track record of turning overlooked industries into billion-dollar giants. He built XPO Logistics and United Rentals into industry leaders using a roll-up strategy, buying and merging smaller companies. Jacobs specializes in fragmented markets, using acquisitions to create efficient, dominant players. His reputation as an M&A guru is why investors like Apollo are eager to back him. After stepping down from XPO and GXO, Jacobs is now laser-focused on QXO. Investors believe he can repeat his past successes in building products distribution. With Jacobs at the helm, QXO has the confidence and leadership to disrupt the industry. Let's see how they're already making moves. QXO and Brad Jacobs have wasted no time making waves in the business world. Since their launch, they've been on a relentless mission to disrupt the building materials industry, and their recent moves have caught everyone's attention. Their first headline-grabbing play was a bold $5 billion takeover attempt of GMS, a major distributor in the sector. This audacious bid sent a clear message. QXO is here to challenge the status quo and isn't afraid to take on industry giants. Although GMS ultimately accepted a deal from Home Depot, the very act of bidding put QXO on the map as a serious, ambitious contender. It showed the market that QXO was willing to go toe-to-toe with the biggest names in the business. But QXO didn't stop there. Hot on the heels of the GMS saga, they pulled off an $11 billion acquisition of Beacon Roofing Supply, one of the largest deals the industry has seen in years. This blockbuster deal instantly catapulted QXO into the ranks of the top distributors of roofing and exterior building products across North America, giving them a powerful footprint in a highly competitive market. The Beacon acquisition wasn't just a headline, it was proof that QXO's strategy is both real and executable. It demonstrated their ability to move quickly, secure financing, and close major deals. And with a fresh $1.2 billion investment, QXO now has a war chest of up to $8 billion ready for future acquisitions. This financial firepower means they're just getting started. Their aggressive pattern is clear: buy, build, and dominate. QXO is executing a playbook designed to rapidly scale and outpace competitors, reshaping the landscape as they go. The entire industry is now on notice. QXO is here to stay, and their momentum is only building. Competitors are watching closely, wondering what their next move will be. But what makes this moment so perfect for QXO's bold strategy? Let's take a closer look at the forces shaping the market right now. Why is the building products industry suddenly so hot for big deals? First, it's fragmented. Hundreds of small regional distributors make it ripe for consolidation. Demand is strong, driven by new construction, renovations, and non-residential projects. Supply chain disruptions have made local, reliable distribution more valuable than ever. Bigger companies can negotiate better prices, invest in technology, and offer superior service. QXO's scale gives them a huge competitive edge. All these factors, fragmentation, demand, supply chain needs, and scale, create a perfect storm for QXO's growth. Investors see a rare opportunity to build a national powerhouse. The timing couldn't be better for QXO's big bet. And they're not alone in making moves. QXO's aggressive expansion is part of a larger industry trend. Companies across building products are merging to gain scale and efficiency. Recent deals include Commercial Metals, buying Foley Products for nearly $2 billion, expanding into precast concrete. TopBuild's $1 billion acquisition of SPI created a giant in insulation distribution. These moves are all about becoming one-stop shops and boosting purchasing power. The GMS takeover attempt and Beacon deal show QXO is leading the charge. The industry is shifting from many small players to a few powerful giants. QXO's new investment will only accelerate this consolidation wave. Competitors are scrambling to keep up. The race to dominate is on. With billions to spend, What will QXO buy next? Analysts predict a major lumber distributor could be the next target, filling a key gap in QXO's portfolio. Lumber is essential for home building, and QXO's presence there is still limited. Acquiring a big lumber yard would make QXO an even more indispensable partner for builders. Other possibilities include companies specializing in interior products or more roofing acquisitions. The building products market is vast, giving QXO plenty of options. Whatever they choose, it'll be a strategic move to strengthen their dominance. The industry is watching QXO's next move closely. So, what does QXO's billion-dollar boost mean for the rest of us? For the industry, it's a wake-up call. The era of small distributors is ending, replaced by national giants. Builders and contractors could benefit from easier sourcing, better pricing, and streamlined service. Fewer suppliers may mean less competition, but efficiency and reliability are the new focus. Homeowners might see faster, potentially cheaper construction as supply chains improve. A stronger building products sector supports jobs and economic growth. Ultimately, this is about transforming how America builds, faster, smarter, and on a bigger scale. Brad Jacobs and Apollo are betting big on this vision. If they succeed, they'll change the industry, and maybe the world we live in.